Okay guys, it is time for a new update here on the Bitcoin price, and I can already tell you we are not only going to take a look at the smaller timeframes, no, we are also going to take a look at the bigger timeframes, since in my last two videos I mentioned to you that I definitely expect the Bitcoin price to fall all the way down to the $28,600 level and retest our ascending 3-day support, which the Bitcoin price exactly did. We are not only going to take a look at the charts today, no, because the price has such low volatility and is right now just waiting to make a decision. We also are going to take a look at our liquidation heat map and our liquidation levels to find out what is the most profitable move for the exchanges and market makers that, especially in these low volatility times, have much more control over the market as some people might expect. But for now guys, as always, please make sure to subscribe, activate the bell. Don't forget to smash up a like here on today's video. It highly is appreciated, especially because it supports the videos to reach the YouTube algorithm. And I think this video is highly important to be seen by everyone, since there is a scenario where I think most of the people will get wrecked if they are not exactly expecting it. What we can see here first of all is, I mean, yes, we have here another bullish continuation pattern, right? We have here another falling wedge, which is a bullish continuation pattern. I mean, we have seen it in the last two times that it breaks to the upside. The only thing that we can already see is that with each time, volatility right now in this continuation pattern is decreasing. This is definitely a sign that this cannot go on for too much longer. We will most likely see here the final bullish breakout, if even possible, and I will explain to you what we need to take a look at to find out in which direction this breakout may be. But I can already tell you that we will not reach such high pumps as we have seen in the past. I mean, in the past we've pumped from $20,000 all the way up to $30,000 on a breakout out of our falling wedge, which is a pump of 33%, or 50%, sorry, of 50%, which is quite a significant price move. And I mean, here we are at the $30,000 level on breakout, and I at most expect the price to reach the $34,000, so at most a 20% pump compared to our initial pump of 50%, right? And I will explain to you why that is with the liquidation levels in a second. Because on the bigger time frames, we are still very, very close to our 3-day support. Our current 3-day candle needs to actually pump relatively rapidly in the immediate short term to not confirm a breakdown here below our 3-day support, which would massively result in panic in the market, and we would definitely retest the $25,000 level, which then could result in a massive M pattern, which would then have a price target on the bearish side. Let us take a look real quick, which would have a breakdown target on the bearish side at the $20,000 level, which, let's pull up the VPVR. We have exactly a high amount of trading volume, a very, very strong support area at the exact price target of our potential M pattern here, in the case that this 3-day support doesn't hold. But why would it be interesting for the market makers to potentially, before we see this breakdown here to the downside, to wick the price all the way up to the $34,000 level potentially? And this can be seen with our liquidation heat map. I want to go here to a little bit of a smaller time frame. I mean, yes, this will in this case get a little bit less extreme color wise, but what we can see here is that we still have a very, very high amount of short liquidations sitting above the $32,400 level. What is at our $32,400 level? Exactly our most relevant and important weekly support and resistance for this bull and bear market, the $30,800 to $30,200, $500 level. And as you can see, exactly at the $32,500 level, a high amount of liquidations is possible. A lot of people chose a leverage that puts the liquidation price above this highly important support and resistance. But as you know, when the market maker and exchanges have low volatile market phases, they love to move the price in the direction where they can make the most money. And the most money would be made here in this case if we see a quick liquidation wick all the way up to the $34,000 level, liquidating all these short positions actually in the market, but at the end of the day then closing our weekly and also our 3-day candle below our $30,800 level. So I will show you in the smaller time frames what chart pattern to keep an eye on, but if we break it to the upside, I can tell you that we must expect a quick liquidation and a quick short squeeze all the way up to the $34,000 level. But why do I think that the likelihood still remains a little bit higher that we are not able to hold this support and we see immediate breakdown to the downside. This is because of a simple factor. Even if exchanges leave these huge amounts of open interest and potential liquidations now here at the current price levels where people are opening positions, as you can see, the liquidation heat map here shows that the amount of liquidations available at this price level is increasing here over time. This means during this sideways movement, more and more people are opening short positions. This means that they could easily move the price quickly to the upside, catch all the liquidations up here, pump the price to the downside, trap a lot of new long positions that are not waiting for a confirmed breakout above this weekly support and resistance, keeping in mind here that if we see a confirmed breakout, if we close a weekly candle above the $32,500 level, that I myself will start scaling up my long positions quite aggressively and even potentially open a new long scalp position at that point in time, because our next relevant resistance would be coming in somewhere then here at the $56,000, $55,000 level. I mean, yes, we can take a look also here at the Fibonacci retracement, which would be coming in at the $48,000 level. So we definitely have, even for a dead cat bounce in this bear market, definitely a lot higher price levels that the price can still reach. So I would, on a confirmed breakout, scale up my long positions here. But we need to see here in the liquidation heat map that by far on the long side, there is a massive amount, a massive batch of potential long liquidations here right below the $25,000 level. And what is the $25,000 level? Guys, it is the level where we could potentially form a very, very large and very, very ugly M pattern in the case that Bitcoin is now not able to hold this 3-day upward sloping support line here on the 3-day chart. And this M pattern for sure would result in us breaking to the downside. It would increase the likelihood dramatically, especially when exchanges know that right below that price level we would have a relatively large amount of liquidations available. And we would need to expect that the price would reach, as I showed you before with the VPVR, our next relevant volume weighted trading area, which is exactly the $19,000 to $20,000 level actually, where we had a lot of trading and a lot of volume going on here in the end of last year. So guys, please make sure to keep an eye on the charts, because this decision will be made during this week. There's not much more time for Bitcoin to make a decision, as we have already seen on the smaller time frames. We are about to break out of this falling wedge, but we have to break out of it to the upside pretty much in the next 2 days. Otherwise, our 3-day candle will close below significant upward sloping support. And as you know, there is always a time where a continuation pattern works, a continuation pattern works, a continuation pattern works. But at some point, the continuation pattern will fail and we will see a reversal against the expectations of the majority of all traders, right? Otherwise, the majority of all traders would make profit, but this is not the case. The majority of all traders are actually making a loss because they are not being careful enough and are not taking into account all the different scenarios as we are doing. So that's why, guys, I can already tell you, just keep an eye on the charts. We have on the smaller time frames a broadening wedge, and this broadening wedge for myself is the chart pattern that I'm going to keep an eye on. If we break it to the upside with a bounce of the past resistance, we have to expect that the liquidation wick all the way up to the $33,000 to the $34,000 may occur. In the case that we are able to close a weekly candle then bullish above these price levels, I will scale up my long positions. I will make an update video, potentially even opening a new scalp long position. In the case that we are getting sold off, we are closing our candle below the $30,800 level, I will open a new short hedge position, because then we would have a small M pattern here, and on top we would have a very, very large M pattern that formed. And I want to be prepared for the scenario of the $25,000 level then breaking and us having a quick and relatively aggressive long squeeze right on the liquidation side that could bring us all the way down to the $20,000 level once again here in the bear market, before we then can really expect with the upcoming halving, the price to reverse and finally move into a next bull market in the beginning of 2024. So let's be extremely careful. Let's keep an eye on the charts. Also, the liquidation levels are showing us that there are still more liquidations also here on the smaller time frames and looking at the exact price levels here all the way up to the $31,000 level, we can see that there is definitely a more significant amount of short liquidations that can occur than long liquidations. So not only on the bigger time frames, right? On the bigger time frames, it's more interesting for the price to move to the downside and liquidate the massive amount of possible liquidations below the $25,000 level. On the smaller time frames, we have above us right now a much more interesting scenario for the exchanges and also for the market makers, since we have a lot more, as you can see with the delta, a lot more available positions that can be liquidated on the short side here in the immediate short term. But for now, guys, I hope you enjoyed this video. Make sure to subscribe, make sure to activate the bell, join our free Discord community, guys. To be honest, we are sharing so much information here each and every single day that I think we are talking here. I think people are talking right now about the PayPal USD and are sharing some news. Guys, make sure you join the community. I will share my upcoming trade there in the case that I'm not able to upload a video quick enough. But otherwise, as always, I will try to make a video. And also from next month starting, we will have Phemex leaderboard prizes. So there will not only be the $15,000 getting distributed amongst the top volume traders on BitGet, but also $15,000 being distributed among the top traders on Phemex that are part of my community. So as said here, the first place is receiving $5,000 at the end of the month on BitGet, second place $3,000, third place $2,000, and a lot of other people are receiving instant cash prizes. Same will be with Phemex. And if you are part in the community, 5 random winners will be drawn on BitGet, and from next month on also 5 random people will be drawn on Phemex that just win $100 for being part of the community. And yeah, as you know, guys, we have video tutorials, all kinds of stuff, so make sure to make use of all this additional free information that you can receive besides my already free and I hope helpful videos. But now, guys, we are going to see us in the next video. Thank you very much for your support. See you soon. Bye bye.